looking at an investment thesis on Rigetti Computing, RGTI, arguing it's a millionaire maker opportunity based on its quantum roadmap.
And we're diving straight into the critique.
Okay, so first up, to really maximize the conviction here, the material needs to firmly establish Rigetti's competitive advantage.
Yeah, beyond just what their own internal roadmap says.
Exactly. The piece does a great job championing their path, highlighting the current 84-qubit Anka 3 and then the future 1,000-plus qubit systems.
But it kind of treats the quantum market as if it's standing still. It doesn't really place those achievements against what competitors like IBM or IonQ are doing.
It feels like it's happening in a vacuum. I see the roadmap, but I don't see the moat.
Right. So if Rigetti hits 1,000 qubits, how is that different or, better than what a rival might have at the same time?
So the suggestion is to add a high-level justification for why this specific roadmap, especially with the NVIDIA collaboration, provides a real defensive line.
A line that actually supports this premium valuation they're talking about.
And we need some concrete examples. I mean, instead of just citing 99% plus fidelity, maybe pinpoint a key area where RGTI is provably ahead.
Like in error correction or maybe something proprietary with their cooling tech?
Or if the NVIDIA partnership is the real key, show us the specific market segment where that NVQLink gives them an immediate, unmatchable edge.
Okay, that makes sense.
All right, next. There's a pretty big bridge that needs to be built between these impressive technical specs and that 10x multibagger potential.
This is the big one for me, the commercial viability.
It is. The material lists all the key milestones. The 316-qubit Lyra by 2026, then 1,000-plus qubits by late 2027.
And it just sort of assumes hitting those tech goals automatically translates into the massive revenue needed to hit those analyst targets?
It conflates a scientific milestone with economic utility.
Yeah, the thesis right now is just a bet on R&D achievement, not on actual market penetration.
So, the suggestion here is to explicitly detail the mechanism. How do higher qubit counts actually turn into commercial applications?
You have to answer the so what question with business data.
Right. For example, explain what specific high-value commercial problems the 1,000-qubit system will solve that today's 84-qubit systems just can't.
Things like molecular simulation for drug discovery or maybe complex financial optimization.
And then you have to link that directly to the balance sheet.
That $600 million cash runway is a huge strength. It buys them time into 2027.
But it only buys time. If those commercial breakthroughs don't materialize, that valuation just collapses.
So show us how the technical path unlocks real revenue before that runway ends.
Exactly.
Okay, so finally, let's talk about the technical analysis.
The checkmark pattern.
Yeah, which feels supportive, I guess, but it needs to be integrated more carefully into this long-term, very speculative investment.
It's a bit of a disconnect, isn't it? The piece details this very short-term bullish signal, a squeeze to $30+, for a thesis that's based on a 5 to 10-year timeline in a super nascent industry.
It feels like relying on that short-term trigger overlooks the incredible volatility baked into this whole quantum is the next AI narrative.
So the solution isn't to get rid of it, but to integrate it. Instead of just mentioning that $21 technical floor,
you need to state a clear failure point for the entire long-term thesis if that floor doesn't hold.
Right. For instance, specify that a breach of that level might jeopardize the capital they need for the Lyra system deployment. That links market perception directly to their operational risk.
Absolutely. By connecting that technical boundary to their financial stability, that's $600 million in cash, you show the floor isn't just some line on a chart.
It's an operational buffer.
Exactly. It makes the whole argument far more robust.
So, to wrap this up, this is a really strong start to a millionaire maker thesis. But it just needs more definition.
Yeah, 3 actionable areas to focus on.
First, define that competitive moat. Give us specifics on proprietary utility, not just qubit counts.
Second, clarify the precise revenue mechanism, how the tech makes money.
And third, fully integrate that technical floor into the long-term financial risk profile of the company.
Address those, and this becomes a far more compelling narrative.
Absolutely. We look forward to reviewing it again.